Hey, welcome back to my channel. Thank you so much for joining me today. My name is Jerry and I am one frugal introvert. On this channel, I am learning all about personal finances. So I'm learning how to manage my money and how to make more of it. So in today's video, I am going to be going through my entire $5,000 Robinhood portfolio. So if you guys are interested in seeing me go through my portfolio, then stay tuned. But before we hop into the video, please be sure to like this video, comment down below, and subscribe to the channel for more content like this in the future. And don't forget to hit that notification bell so that you never miss another upload. All right, so let's hop right into this portfolio. So over here on the left, you can see that my portfolio is about $5,200. It's just under that. It's $5,188 currently. So this little chart right here, you can actually see in real time what your returns are. So currently, this is live at the time of me recording this. I am down $18.93, but you can also see your returns from the past day, the past week, the past 1 month, 3 months, 1 year, and all time. So I started investing back in 2018. So my all-time returns are actually up 38%. So $1,432. Now over here on the right is actually the entire portfolio. So we're going to start with ticker symbol F, which is Ford Motor. So Ford is currently trading at $20.12. You can see that it is in the green today, so it actually is up today. So I purchased Ford at an average cost of $8.56. So I own just under 18 shares total. So 17.88 shares of Ford. So Ford actually makes up just under 7% of my entire portfolio. My total market value is actually the amount that I actually have invested into Ford, which is $359.73. So you can see that I have made about a $9 return today, but my total return is $206.74. So my total return is actually 135%. So that means that I have made back every single penny that I've invested into Ford plus more. So Ford is actually a dividend paying stock. And if we scroll down here, all the way down to the bottom to my history, you'll see that my last dividend that I received was on December 1st, $4.78. And this was reinvested back into Ford, which means that I can use the dividends that I receive to purchase more and more shares of Ford, which is why if you scroll back up, you'll see that I have this 0.877933. These are all the fractional shares that I've been receiving because of the dividend. Moving right along to Bank of America, ticker symbol BAC. So Bank of America is currently trading at $44.26. You'll see down here that my average cost was actually $26.77. So I own just over 2 shares of Bank of America, and it is about 1.76% of my total portfolio. So I currently have $91.33 invested into Bank of America. So I've made a little bit of a return today, but my total return is $36.09. So that is about a 65.32% return. And then if we look down here, I do have some upcoming activity. So I do have a dividend pending for 43 cents, and this is going to be reinvested, and I should be getting that on December 31st. Next up is Zynga, ticker symbol ZNGA. So Zynga is currently trading at $6.40, and my current market value is about $6.40, and that's my total return as well. You'll see that I own 1 share of this, which is about 0.12% of my total portfolio, but my average cost is $0. This means that I did not actually purchase Zynga. This was a free stock that was given to me through referrals. So I actually referred my mom, and she actually invests through Robinhood as well now, and she signed up using my referral code, which I will link on the screen right up here. But if you'd like to sign up for Robinhood, definitely sign up using my code. I'd greatly appreciate it. And both of us will benefit from it because both of us will receive a free stock. Now, if you don't know what Zynga is, you might be familiar with some of the Facebook games that they actually develop and manage, like Farmville and Chess with Friends, and a lot of those Facebook games like that. Next up is Nike, ticker symbol NKE. So Nike is currently trading at $164.30. And I am kicking myself because I only have one share of Nike. And I bought this at an average cost of $78.12 back in 2018. And my value in the company is now $166.22. So I am a little bit down today, but my total return makes up for that. So I've made a total return of $87.17, which is 110%. So I have made back every single penny that I have invested in Nike. Now, Nike is also another dividend paying stock, and you'll see this recurring pattern here. I like to buy a lot of dividend stocks because I like to get those dividends and I like for them to be reinvested into the company so that I can purchase more and more and more shares of that company. So I currently have a dividend pending, so I should be getting it on December 28th for 31 cents, and that will be reinvested as well. Next up is Coca-Cola, ticker symbol KO. So Coca-Cola is currently trading at $58.06, and I bought this at an average cost of $47.67. So I currently have about a little over 3 shares of Coca-Cola, and it makes up about 3.56% of my total portfolio. And so you'll see that my total market value is currently $184.15. Now, today's return, it's up a little bit, 89 cents, but my total return is $32.97. So that's a little under a 22% return. And if we scroll all the way down to the bottom, we're going to see that my most recent dividend was paid on December 15th for $1.32, and that was reinvested up here. And you can see this market value here is that $1.32. So I purchased this amount of shares with that $1.32. Now, I told you guys there was going to be a reoccurring pattern with these dividend paying stocks, and that still holds true with Panasonic, ticker symbol PCRFY. However, unlike the other dividend paying stocks that I showed you before, like Ford and Coca-Cola and Bank of America, I can't reinvest my dividends into Panasonic because they no longer allow their shareholders to purchase fractional shares. So basically what happens is, and I'll show you guys, the dividends that you receive will go under your buying power. So you can use those dividends that you receive to actually purchase fractional shares of other stocks that allow you to purchase fractional shares. So going back to Panasonic, it is currently trading at $10.84. I bought this at an average cost of $8.57, and I have just over 5 shares of that, so it makes up a little over 1% of my total portfolio. So I haven't really made too much today, but my total return is $11.45, which is about a 26.5% return. And so my current market value in Panasonic is $54.60. And then if we scroll all the way to the bottom here to my history, you'll see that my last dividend paid was December 7th, and it was 56 cents. But unlike the other ones, you don't see that reinvested here or in that reinvestment word here because it wasn't reinvested into the company. Next up is Apple, ticker symbol AAPL. So Apple is currently trading at $173.89. And you'll see that my average cost per share was $119.54. Now, I actually purchased Apple last year in August of 2020, right before Apple did its 4-for-1 stock split. So if you don't know what a stock split is, I will briefly explain it. But it occurs when a stock's price has been rising and a company wants to bring in a wider range of investors who may have been unable to purchase a single share at a higher price. So in this case, Apple was trading at close to $500 per share, which is a lot of money for most people. So last year, back in 2020, I bought 2 shares of Apple at about $471 each, right before that stock split. And then on August 28th, Apple did their 4-for-1 stock split, which meant that for every 1 share that I bought, I was going to receive an additional 3 shares. So since I bought 2 shares, I now own 8 shares. Then the price of those shares were then split, making each of those shares around $117 each instead of that $471 each. Now, my overall market value in the company did not change when this happened. So as you can see here, my market value is $1,480 about $1,483. So basically, I just went from having 2 shares at about $471 each to now owning 8 shares at almost $120 each. So this was just basically a good way for Apple to allow more and more consumers like you and I to be able to invest into their company at a lower price. So like I said, this is my market value here, $1,483 almost. I have made a return today about $9, but my total return is about $464, which is about a little over a 45.5% return. So as you can see over here, I do own just over 8.5 shares of Apple, which makes up about 28.65% of my total portfolio. Now, the good thing about Apple is that it is also a dividend paying stock. So if we scroll down to my history down here, my last dividend was received on November 12th for $1.87. And you see that word reinvested. So it was reinvested into Apple so that I can purchase more and more shares. Next up is Tesla, ticker symbol TSLA. So Tesla is that girl, but she's been acting up a little bit lately and she needs to get her act together because I checked Tesla earlier and she was over $1,000 per share. Right now, she's just over $992 per share, but still good either way. My total market value is $1,984 almost. So you can see here that I have made about a $107 return just today. Overall, my total return is $1,094. So that's a 123% return, meaning I've made back every single penny that I've invested into Tesla. So I bought Tesla at an average cost of $444.89, and I got 2 shares of that. So that makes up about 38% of my portfolio. Now, I bought Tesla after their 2-for-1 stock split back in, I believe it was September or October of last year. I was not able to purchase Tesla right before the stock split because, like I said, Tesla's that girl. She was trading at like over $2,000 per share, and I didn't have the coinage to do that at the time. So I had to wait until after Tesla did the stock split so that I could get it at this price here instead of the $2,000. Now, Tesla is a growth stock. They do not pay dividends. So basically what Tesla does is the money that they make, instead of using it to pay their shareholders dividends, they use it to reinvest it into the company so that the company continues to grow over time. Next up is Easterly Government Properties, ticker symbol DEA. So Easterly Government Properties is actually a company that leases properties to U.S. government agencies. So they are currently trading at $22.32, and I bought them at an average of $21.85, and I own just over 3 shares, making this about 1.31% of my total portfolio. So my market value as of right now is just under $68. I have made a little bit of a return, just 18 cents today, and my total return is $1.44, which is about a 2.16% return. Now, DEA also pays investments, and if we scroll down to my history down here, you'll see my last investment was actually on November 24th, and that was 54 cents, and it was reinvested. So next up is Lucid Group, ticker symbol LCID. So Lucid Group is actually a luxury EV or luxury electric vehicle, and it is currently trading at $38.52. Now, I bought Lucid Group at an average cost of $30.41 per share, and I own just over 1.5 shares of this company. So that puts it at about 1.2% of my total portfolio. Now, my total market value in Lucid Group is $61.62. So I have made a little bit of a return today, just 80 cents. And my total return is about $13, which is about a 26.7% return. Now, Lucid Group is not a dividend paying stock. So I believe it's going to be a growth stock, more like Tesla in the sense where they're going to continue to reinvest that money into the company to make it grow. So next up is VTI, the Vanguard Total Stock Market ETF. Now, if you are subscribed to Mommy Trader here on YouTube, then a lot of us were introduced to VTI through her monthly investing challenge. And if you're not subscribed to her, then I don't know what you're doing. Go subscribe to her channel. She is amazing, and she actually really helps you learn how to invest. Her videos are very, very good for beginners. So I will link her channel below in the description box as well. But if you don't know what an ETF is, it's basically an exchange traded fund. So it's a basket of investments that you can buy and sell on a stock exchange, just like regular stocks. And they are great for beginners because they offer diversification so that you're not putting all of your eggs in one basket. It allows you to own stake in multiple investments while only having to make one purchase. So it's actually less riskier than putting all of your money into a single stock. So if we scroll down, you see this section that says what's in this fund. It actually tells you what sectors this ETF holds. So you're going to see a lot of technology, financial services, healthcare, consumer cyclical, industrials, real estate, so on and so forth. And you can see the top 10 holdings in VTI are Microsoft, Apple, Amazon, Alphabet, Tesla, Nvidia, and more. So if we scroll up back to the top, you'll see that VTI is currently trading at about $238 per share, and my market value is only $68.59. Now, I do not own a full share of VTI as of yet, so I've just been purchasing fractional shares. So I own about 0.29 shares of VTI, and it makes up about 1.32% of my total portfolio. So as you can see, I have made a little bit of a return today, about 42 cents. My total return is $2.58, so just under a 4% return. And VTI pays dividends as well, but I have not received any dividends as of yet. Next up is VOO, or ticker symbol VOO. This is the Vanguard S&P 500 ETF. So it is similar to VTI in the sense that it has a lot of the same holdings. So you'll see down here the sectors are technology, financial services, consumer cyclicals, healthcare, etc. It has a lot of the same holdings: Microsoft, Apple, Amazon, Tesla, Alphabet. But the only difference is the percentage of the asset. So for example, Microsoft makes up about 6.35% of VOO. But if we go back and look at VTI, Microsoft makes up about 5.24% of VTI. So VOO is currently trading at $428.31. And my current market value in VOO is $224.36. So now I don't own a full share of this either. I own just over a half of a share, but I am continuing to invest more and more so that I can finally get it up to one full share. But VOO makes up about 4.33% of my entire portfolio. You'll see that I have made a little bit of a return, $1.36 today. My total return is $3.61. So that's about a 1.63% return. So VOO also pays a dividend, but I have not received any dividends just yet. So next up is the Vanguard Small Cap ETF, ticker symbol VB. So VB actually tracks the performances of some of these smaller companies. And if we scroll down here to the sectors, you'll see a lot of the same sectors as VTI and VOO. So you've got the technology, you've got the industrials, the financial services, healthcare, so on and so forth. And some of the top holdings in VB are Biotechny, Poolcorp, Diamondback Energy, etc. So scrolling back up, VB is actually trading at just under $223 right now. My market value is just under $40. It's $39.96. So I don't own a full share of this one either. And a lot of these ETFs, you'll see that I don't have full shares in. I just have fractional shares right now. So as of right now, I am at almost at 0.18 shares of VB. And so that makes up about 0.77% of my portfolio. So I have made a little bit of a return, just 18 cents today, but my total return is down. So it's negative $1.09. I'm not too worried about losing money as of right now. I don't own a whole bunch of money in this particular ETF, but I'm going to hold on to it and I'm going to continue to invest more and more money because it's going to bounce back and I'm going to actually end up having a profit. And VB, just like VTI and VU, also pays a dividend, but I have not made anything as of yet. So next up is VNQ, the Vanguard US REIT Fund. So this is a real estate fund. So if we scroll down here, you'll see the majority of the sector is real estate. And one of the top holdings in VNQ is the Vanguard Real Estate 2 Index Fund. But you'll also see some other companies that you may have heard of, like American Tower, Prologis, Crown Castle, Equinix, Public Storage, Simon Property Group, etc. And so scrolling back up, you'll see that VNQ is trading currently at $113.04. And my current market value is $30.55. So I do not own a full share of this one either. I only own about 0.27 shares of VNQ, and that's about 0.59% of my portfolio. So I've made about a quarter today off of VNQ, not a lot of money. My total return is $1.55, so about 5.34% return. And VNQ also pays a dividend. I haven't received one just yet. Next up is Walmart, ticker symbol WMT. They're currently trading at $139.81. My market value is $28.50, so I don't own a full share of this one either. And I'm currently at about 0.2 shares of Walmart, so it's making up about 0.55% of my portfolio. I've just made 4 cents today, and my total return is actually down $1.50, so that's a negative 5% return. I'm not worried about Walmart. I know Walmart's going to bounce back. I'm going to make more. I'm also going to invest more into Walmart as well. But you can see I have some upcoming activity down here. So I actually have a dividend that's pending for 11 cents. That's going to be paid on January 3rd of 2022. Next up is VDC, so the Vanguard Consumer Staples ETF. This is another one that was introduced to us by Mommy Trader. If you're subscribed to her channel and you've been doing that investing savings challenge, Apple was one as well. Walmart was another one as well that was introduced to us by her. So that is currently trading at $194.02. And my current value is $30.96. And I don't own a full share of this either. I currently own about 0.16 shares. So that's about 0.6% of my overall portfolio. So I've made about 8 cents today, and my total return is about 76 cents. So that's about a 2.5% return. So judging by the title, you've got a lot of consumer staples in VDC. So if we scroll down to here, you'll see that 97.57% of VDC is made up of the consumer defensive sector, and then you've got a little bit of healthcare. So if we scroll down, the top holdings are Procter & Gamble, you've got Walmart, you've got Coca-Cola, you've got Pepsi, Costco, etc. You can even see Colgate down here, Estee Lauder. So there are so many consumer goods that are in this particular ETF. So this is also a great one for beginners. There's 100 different holdings in this ETF. So it's a great one for beginners as well. So next up is Abbott Laboratories. The ticker symbol for that is ABT. So this is another one that was in Mommy Trader's investment challenge. We're actually investing into that this month for December. And you'll see that it is currently trading at just under $138 per share. My market value is $65.21. So I own just under half of a share. I'm at 0.47 shares, and this makes up about 1.26% of my total portfolio. So you'll see that I have made a little bit of a return today, almost 2%. It's $1.26. And my total return is $2.70. So it's just at 4.32% return. And so Abbott also does pay a dividend, but I have not received one as of yet. But if you're unaware of what Abbott Laboratories is, they actually manufacture, develop, and sell healthcare products. So the last ETF that I have in my portfolio is the Vanguard Healthcare ETF, ticker symbol VHT. So the name of the ETF pretty much says it all. So you're going to have a lot of holdings in the healthcare sector. So if we scroll down here, you'll see that 99.52% is in healthcare. And you'll see some of the top holdings are United Health, Johnson & Johnson, Thermo Fisher Scientific, Pfizer, and even that Abbott Laboratories that we talked about earlier. And there are so many more companies in this ETF as well. But just scrolling back up, VHT is trading at about $262.51. If we scroll down a little bit, my market value is $64.57. So I don't own a full share of this just yet, but I do own about a quarter of a share. So I'm at about 20.24 shares of VHT. This makes up about 1.24% of my total portfolio. And my return for today, I made a little bit. It's about 41 cents. My total return is about $1.92, so it's about a 3% return. So if we scroll all the way down here to my history, you'll see that I actually did earn a dividend just 18 hours ago, and that was 15 cents. So this was actually reinvested into VHT, so it bought me 0.000576 shares of VHT. And the last thing in my portfolio is some cryptocurrency. So I own 933 Dogecoin. So I know you guys have heard about Dogecoin. It was really hot a little bit earlier this year. I got in at the absolute worst time. My average cost per coin was actually 69 cents, which I never should have done that. I never should have bought it at 69 cents because guess what? You see my total return down here? Negative $483.
It was gone.
Let me just go in the bush and weep. Let me just go in the bush and weep. I just have to go in the bush and weep. Really. I don't understand.
So this is almost a negative 75% return. So I've lost the majority of the money that I've invested into Dogecoin. If you're new to investing, I would not recommend just jumping on the bandwagon and buying a cryptocurrency or a stock or an ETF or anything for that matter, just because you hear a lot of people talking about it. You've got to do your own research, and I failed to do that in this case. So, I still have some equity in Dogecoin. It's $162.51, and it is up today. I have made about $1 return, but it doesn't make up for this massive loss that I am seeing right here. So it does make up about 3% of my total portfolio as well. I don't plan on selling it as of right now. I want to hold on to it just to see what happens. I have been thinking about selling it and just kind of cutting my losses and taking that L, but I just want to see what's going to happen over time. I've already invested so much money. I've already lost so much money. Why not just hold on to it and see what happens, right? So I want to take a moment to quickly acknowledge those of you who are on the fence about investing and you haven't quite jumped in just yet. You see everybody is investing and you want to do it, but you're a little bit too afraid to do it. So think about the scenario and what you would do if this happened to you, right? So let's say, for example, you invested $100 today into the Robinhood app. And let's say everything is going fine. You see a little bit of gains, you earned $1 or $2 and everything's fine and dandy. And then you log into Robinhood next month and you see that you've lost $25. What are you going to do in this scenario? Are you going to A, panic and sell all of your investments? Or B, are you going to leave it in the stock market and see what happens? If you picked A, then you are probably not ready to start investing right now. And that's okay. You have to be comfortable enough with risk and volatility, because that's exactly what the stock market is. It's volatile. It's going to be up and down all the time. But historically speaking, the stock market always recovers. But you have to be comfortable enough to be willing to put your money into something where you know that some days you're going to lose money, but other days you're going to gain money. So I also just want to say that I am not a financial advisor or a fiduciary. So take everything that I say with a grain of salt, but that is just my advice and my humble opinion. So that was it for this video, you guys. I hope you guys enjoyed it. Let me know in the comments below if you have any questions. Also, for those of you who are investing, what are some of your favorite picks and what are some of your recommendations to add to my portfolio to help with diversification? Also, these are not my only investments. I do have a little bit of cryptocurrency in the Voyager app. I also have 2 Roth IRAs, one with TIAA-CREF that I'm currently in the process of transferring over to Fidelity. And then I also have 2 403A plans through my employers. So let me know if you would be interested in seeing a video about those as well. But once again, I hope you guys enjoyed the video. If you did, please be sure to give it a big thumbs up and subscribe to the channel for more content like this in the future. I hope you guys have a great day. Enjoy the rest of your week. Stay safe, be blessed, and until next time, peace.